Episode 67 of Real Talk. I want to thank the Jewish Federation of Greater Los Angeles for putting on literally a once-in-a-lifetime trip to New York. They assembled an all-star cast of real estate legends for us to meet in really intimate settings, 15, 18 of us tops. The likes of John Tisch, Larry Silverstein, Bill Ackman, Lloyd Goldman, Richard Mack, and Addie Chu. The highlight was really everyone, but what stands out to me is meeting Larry Silverstein, 93 years old, suit and tie in the office, owner of the World Trade Center, who bought the World Trade Center site 6 weeks before 9/11, and just amazing stories, unbelievable stories of obviously 9/11, the days after 9/11, and the trials and tribulations of rebuilding World Trade Center. And he recently wrote a book called The Rising that I encourage people to get. This week, I have David Chasin on the show. David is the CEO of Pegasus Investments Real Estate Advisory. David is a longtime friend, outspoken on everything, socially, real estate-wise, and politically. And I had him on the show a few weeks ago, literally a couple days after the election. And so we had a very frank and candid conversation about the presidential election and also on the real estate industry. I hope you enjoy my conversation with David Chasin.
Welcome to Real Talk, Real Estate Discussions with Andrew Kirsh. In each episode, Andrew interviews industry leaders. We'll hear their real-time opinions on today's market, their background and unique career highlights, and guidance for newcomers into the industry. You can find this show at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Now here's the host of Real Talk, Andrew Kirsh.
Welcome to another edition of Real Talk. We are live in my office. Let's go. With David Chasin, co-founder of Pegasus. David, how you doing, man?
I'm doing great. I'm feeling good.
By the way, it's great.
I'm feeling fantastic.
Yeah.
You know.
Well, first of all, it's great to see you.
Mm-hmm, you too. I don't get to see you enough.
We don't.
Century Park East, we were just talking about.
You know, we're geographically undesirable. We're a block away, and
anyone who knows Century City, Avenue the Stars, and Century Park East, it's different. It's a different zip code.
It's just a different.
It's like Beverly Hills adjacent.
Well, you're in the high rent district of Century City.
I actually, there's a story there. I don't know if you want to go to the story because I know you have a whole thing, but we locked down a 10-year lease in 2020 with Douglas Emmett.
Pretty good time to be a tenant.
Terrible timing to be in the real estate business, renewing a 10-year lease, but I was like, YOLO, this is going to work or not. Right?
And it's worked.
And it's worked.
So we are recording this. What is our date today? November 7th.
November 7th, 2:22. 2:22 p.m.
There you go.
Deuce is wild.
A little election happened 2 days ago.
Yes.
By the time this gets aired, probably about mid-November.
Okay. Oh, that quick?
Yeah.
Wow.
Well, we'll
impressive.
See. So
right.
You're the first person I'm going to be asking this question.
Okay.
On my podcast. What are your thoughts of the outcome of the presidential election?
Okay, so first of all, I'm over the moon. I'm just it's a win for everyone, especially Los Angeles.
Well, it can't be a win for Kamala.
It's a win for everyone except for Kamala. No, I'm kidding. It's look, without getting partisan, we actually did a newsletter last month, which I encourage you to start reading. We started a monthly newsletter. It's called Enough Of. And it's bitching and kvetching. Like, I've had enough of this, right? And it's like not real estate related specifically, but it's tangential, right? So like the last one was enough of the election, right? That was the kind of the headline, enough of the election. Because it doesn't really matter for the commercial real estate industry. I mean, it matters a little bit, but not a lot, right? It doesn't matter for the stock market. I mean, I don't know if you've seen all this stuff floating around, but there's so much data around the last, 20, 30, 40, 50 years of what happens during a Democrat or a Republican controlled White House, and the same damn thing every time. Like it's not about.
It doesn't matter.
It's about how long you stay in the market for.
Mm-hmm.
It's not about who's in the White House for any given period of time. So I don't think Trump's gonna, I don't think he's gonna change the real estate world. I don't think Kamala would have. But look, a big part of investing is psychology, and I think the psychology is phenomenal right now.
Well, Jerome Powell today, as they lowered rates by a quarter point, he was asked, will you leave if Trump fires you? He said, he can't fire me, and I will not leave. And I guess his term...
You can't fire him.
That's right.
I thought the president appoints the...
He said today that you cannot fire the Federal Reserve Chairman.
Wow.
So he's in until mid-26.
I actually like Jay Powell. I'm a fan of his. I'm not like an economic theorist, but
even though you make fun of him when he said inflation is transitory.
Yes, because he was wrong, and that was a joke. And I'm pretty sure I made fun of Biden when he said that. But yeah, Jerome Powell said it too. It wasn't transitory. It's been sticky, right? Call it for someone who's in the real estate game, who's watching rates. This doesn't feel transitory. It feels somewhat secular.
Yeah. So what do you?
But I want to be on record.
Yeah.
I'm a fan of Jay Powell. I think he's extraordinarily articulate. I think he's real. I think when I watch his pressers, I believe him. He speaks in normal speak. He doesn't speak in like this esoteric academia type of terminology. When he has a news conference, he's speaking to everyone. Everyone gets it. And I trust him. And I'm not surprised by this quarter point rate reduction. I think most importantly, he's trustworthy, right? So I trust him. I do trust that when they are signaling, hey, what's important for us is stability. We're going to stay the course. They're going to stay the course. They're not going to whipsaw back and forth.
So how do you envision the real estate market being under a Trump administration?
I don't know. I mean,
let's go back a couple of years. 2021
mm-hmm.
and the first half of 22.
Mm-hmm.
In my practice,
best years of our firm's career.
Yep.
Out of ever.
Same as mine.
You still got some.
Who was president during that period of time?
It depends on who you think actually won the election in 2020. But the ABC, CNN, MSNBC all said Biden was the president. No, I'm kidding. Biden. Yeah.
And so, what is?
Look, here's the thing. So I was actually going back and thinking about this because I was thinking about the Obama years, and I was thinking about George W. Bush years, and I was thinking about the Clinton years. I don't know for sure, but there has to be a lag, right? You know what I'm saying? There has to be a lag, right? So I'm not crediting Trump with anything, and I'm not discrediting him with anything, just like I'm not doing it with Biden. I don't think it really matters that much. Also, I think 21 and 22 were unbelievable aberrations, right? COVID, a lockdown.
Sure.
For what? How long were we actually locked down? I don't remember anymore.
Well,
COVID brain fog.
In LA, much longer than most people. We couldn't even go to the beach.
No, I mean, yeah, of course I recall. So the point is that we were literally locked up, right? And then we got unbelievable stimulus, right? PPP, right?
Sure.
That was nuts, right? And it felt like the roaring 20s, right? In terms of spending and consumption, rates came down to zero, right? So, to stimulate the economy effectively, right? So you had PE, VC, all of these, everyone had money, right? There was multiple expansion throughout every asset class. It was nuts. I don't think that's an event that's going to repeat itself.
What's remarkable to me about the election is I would venture to say every demographic Trump did better than, or maybe I should say it reversed. Kamala did worse
than Biden
right. In every single demographic.
Yeah, I actually have that. Have you seen that Jake Tapper clip that people have been sending around?
Or he says not one county.
Wait, he's not one county, and it's just literally that magic wall, the John, whatever his name is, John King, the magic wall, and it's
so you do watch CNN.
I do. By the way, okay, so listen, so I wore my American flag pin today just because it's big and it's bold, but I normally wear it's a double pin. It's a Israeli flag and an American flag. But I didn't want to be like triggering to any of your anti-Semitic guests, so I wanted to keep it just. I'm just kidding. No, I wanted to be all about America because that's what we're all about. Like that's the wave. Like that's what I'm excited about. Is like it's about America, right? It's not about blue or red. It's about America. So when it's funny because I actually posted something on Instagram at David Chasin. By the way, I'm private, so I'm gonna have to screen you before I accept you. But at David Chasin, if you're interested. I posted something last night on Instagram. Van Jones. He's been wearing a yellow hostage pin, and he wore the blue square, which is kind of like the bringing anti-Semitism to to the forefront. No, I love Van Jones. I think he's great, and his support's been incredible. That's a little bit of a side vehicle, but yes, I do watch CNN, and that map with Tapper and John King was like, this is a map of all the counties that Kamala outperformed
by 3% or more.
Was it 3% or more? Oh, I thought it was any outperformance.
Yeah.
Okay, so 3% or more.
I think that's because of margin of error.
And it was great.
It was 0.
It was a great. There was like Jay Tapper's like, wait, none? Not one county?
Yeah, I think that's what speaks volumes, is that not one demographic did she outperform. And so that it really was a mandate. It really was a call from the majority of Americans, the middle, the right, obviously, maybe some from like the center left of wanting change.
Yeah, there's a lot of reasons, and no one will ever know why, right? These exit polls, they're great. They're not.
Well, everyone's got their own reason,
right?
But all the reasons pointed towards a Trump presidency.
Yeah, I heard an interesting fact that a lot of these exit polls, abortion actually was not a thing because so many now that it's a state's right, so many states have taken it upon themselves to pass abortion protection laws, statewide. Mm-hmm. That a lot of people that was like kind of the hot button issue. They're like now basically saying like, okay, yeah, like I'm protected here. Like I don't care about this being a federal issue or not. It doesn't matter. I care about the economy, right?
Yep.
I care about the border, and those are the two main things in the election, I think. So also, like listen, this should not be a shock. Okay, I don't care what you think about her. She's obviously a smart, bright woman. She's done well for herself. I'm not trying to discredit that. I think she's annoying, but she's smart, and she became the vice president of the United States. Like, we can't belittle that. But you can't be surprised when someone who in the 2020 primary polled at less than 1%, okay, who then never had to go through another primary process and get a single vote in 24, mm-hmm. got smoked in like the generals. Like, that shouldn't be a surprise.
You're right. Well, this podcast does focus on real estate. Okay. So I still want to talk about the election, but more locally in California.
Yeah.
And there was a ballot measure 33 mm-hmm. that let's just talk for those that may not know about the ballot measure, it would have overturned the entire rent control system in California that would have allowed cities to essentially rewrite their rent control laws. Mm-hmm. And the worst part of this potential proposition is that it could have made rent control, even upon a vacancy of a residential unit, where rent control would still stay in place mm-hmm. for that unit, as opposed to once a unit becomes vacant, then you could take it to market.
Right.
That was the big possibility. That lost overwhelmingly in California. And so there's been a lot of tests that my clients, capital market providers, have looked at and decided, am I going to draw a line through the city of LA, of doing business in LA? And that a lot of those capital markets groups did that when ULA and the mansion tax was passed, mm-hmm. putting a 5.5% transfer tax on any real estate sale over $5 million. And so this proposition, if it passed, I think would have been the death knell of the California real estate market.
I like that first of all, I like that you know what the terminology is, and it's death knell, right? Do you know how many people they say death nail?
Huh.
Like they think it's like the nail in the coffin. It's not. It's death knell. KNELL, right?
Yeah.
Yeah. Okay.
So the concern was,
So-
will people be, are they even aware?
Yeah. Oh, yeah, for
They
sure.
were.
Yeah, for sure they're aware. I mean, look, this happened in New York, right? So, I mean, they're a good case study to see what happens when you have not just rent control, but what do they call it? Is it rent stabilization or rent?
Well, it's decontrol. Well, we have decontrol, but it's rent control when a unit becomes vacant.
No, I know. That's there. Yeah. So, like, I just looked at a rent roll of this like portfolio of apartment buildings in Chelsea. I looked at it this morning, and it had 3 different lines, and it said like percent of units that are market, like not rent controlled, free market, I think is what they called it. Percent of units that were rent controlled, and percent of units that were rent stabilized, like a different category, right? Like, because you have tenants in there that are rent controlled, and then you have other units in there based on their vintage or whatever it is. It doesn't matter whether the tenant moves in, stays there, or moves out. The state's telling you, or the city, it's probably the city, is telling you what you can and can't do, right? So 33 was the law of the land has been Costa-Hawkins, right?
Correct,
Which
from 1995.
Okay, so that basically says that you can, any building, older than 88 or something, 1988?
Well, each city has its own rent control. In the city of LA, it's 78. 1978. So if you're
so if city has its own rent control, then what changed? Then what was on the ballot?
What that you could create, you could modify your rent control law, where when a unit becomes vacant, you couldn't take that unit to the market.
Got it. I thought this was more like this is now putting it in the hands of the cities.
Yes.
But already the cities are have their own rent control, don't they? The city of Santa Monica has its own rent control, right?
Correct, but it had guardrails under this Costa-Hawkins
Got it.
framework.
So those were the bumpers. And
Yes.
this would have deflated the bumpers.
Correct.
Okay. As you can see, I'm not a multifamily expert. Do not come to me for multifamily advice. But it does tangentially impact our business because we do a lot of single tenant net lease and shopping center investments for our clients. Yeah. And the natural migration has been not just in Los Angeles, but other blue cities across the country. And this is not a political indictment at all. There's been an absurd amount of wealth that's been created in these blue cities, right? New York, San Francisco, LA, right? Like that. And by the way, kudos, that's great. Like, there's been a lot of wealth that's been created. I don't think it's been distributed properly, and we have a major wealth gap here, and that's a big problem that we have to face. But the wealthy have gotten extraordinarily wealthy owning real estate in blue cities historically, right? And so you see it all the time. You know, the patriarch gets older. I don't want to deal with the management anymore. Or, I'm getting, $500,000 a year in income, but my building's worth, $20 million, right? Like that's a 2.5 cap or whatever the number is. I want to sell it and then go buy something stabilized, a Walmart or a Home Depot or a Starbucks or Chipotle, whatever, right? So that's been happening. That's like this generational kind of planning and transfer of wealth that's been happening. A lot of these people, just for lifestyle reasons, don't want to own apartment buildings. But the regulatory issue has fueled our business for the last several years, where it's not getting better, it's getting worse. I think this is great, even though it would probably have been better for our business had 33 passed. I'm happy it didn't because I'm for a free market. But we're already getting phone calls from people like, "Hey, we know it passed. I mean, we know it got defeated, yep. But we still have concerns over, it's not over."
Yeah. Well,
right.
Let me see. We've gone 17 minutes and 18 seconds, and this is the longest I've gone in a podcast without asking my guest about his business. So talk about Pegasus.
We're having so much fun.
We are.
Why do you want to throw cold water on it by learning about Pegasus? That's like the most boring thing in the world.
We could break down the election even further, but I think that horse has been beaten to death, and there will be books written about why it happened.
Yeah.
One last thing about this election, though.
Okay. I knew I could get you to go back to the election.
I wanted Josh Shapiro to be the VP nominee.
A lot of people did.
And I think what this election may
Tampon Tim was a joke. I mean, that guy was the worst pick of all time. By the way, I wish I would have come up with that name. That's a well-documented nickname.
Is it?
Yeah.
I hadn't heard it.
Really?
Yeah.
That's pretty funny.
They don't cover that on CNN?
I guess not.
Wow. Okay.
So,
no, because that was his thing where was he from? Minnesota or something? Minnesota, right?
Minnesota.
He championed legislation
to put
tampons in men's bathrooms.
I am following.
Right? That's why. So Trump nicknamed him Tampon Tim. Right?
Got it.
But he was terrible. He's the worst.
He was a good football coach. So what I wanted to say until you rudely interrupted me is that perhaps this is going to take the Democratic Party to the center, maybe, or at least closer to the center.
You hope.
And we will have more candidates for the Democratic Party that will more resemble, I'm not talking about, racially or gender-wise, I'm talking about politically resemble the country.
Maybe not, because, and by the way, obviously, hopefully you're right. I'm hoping like the AOCs and the Rashid Tlaibs and that fringe, that they're going to basically be distanced and say, like, you're bad, you're toxic for our brand. But I don't know, because if you just look at 2020, like, the Republicans didn't learn their lesson, right? Trump lost in 2020,
and they doubled down.
According to some people. He lost the election in 2020. We lost the midterms in 22, right? And everyone, this guy was being indicted. Everyone up and down ballot was getting smoked because of him. And everyone was saying, like, hey, Trump's going to be in the rearview mirror, right? And what ended up happening? All that ended up happening was he got rid of all the old school rhinos and basically lined up with the MAGAs and got even further. I don't think they're extreme.
How do you win a presidential election that way, though? And he did.
By having such a pathetic opponent.
So you think if it was a Gavin Newsom or a Josh Shapiro,
he
would have lost?
I don't know. Look, Gavin, I hate what Gavin's done to the state of California, so I'm not a fan. But he's a beautiful politician. Look at that hair.
My wife already told me.
He's gorgeous.
My wife told me he's her one.
Yes, Meredith told me the same thing.
If
Meredith and Courtney could go out,
they could have a threesome.
They could go to French Laundry together, and they could do whatever they want.
Oh my! I'm either going to get the most views of this podcast, or I'm going to get canceled.
Lucky for you, people are going to see who your guest is, and no one's going to watch. So you have nothing to worry about.
All right.
But no, look, here's the thing. I think Trump, forget about what you think of him as a person. I think his policies are really good. And a lot of people, even my friends who are on the left, actually agree with a lot of his policies. It's just, he's such a toxic character that people just couldn't get around it. But people that didn't vote for Trump, good for you. Like, I don't judge you for that. You know what I'm saying? It's like, I think it would be great if people didn't judge me for voting. Like, you vote whoever you want, man. It's a free country, right? But I get judged. You asked me before we got on, like, hey, like, I'm going to talk about the election. Like, you can say whatever you want or don't say whatever you want. But like, I just want to be treated the way I treat other people. And I think like there's a lot of reasons to not vote for Trump. I get that for sure. So to go back to your question,
I don't even remember it.
Your question was, does this bring the Democratic Party more
to the
middle?
To the middle.
I don't know, because I don't know if it really, that didn't work but Trump's also such an anomaly. Right? Anyone else would be in jail by now.
Absolutely. Can we pivot to real estate?
Yeah. Pegasus.
Yeah.
So now it's been 21. You thought it was 17 minutes, but now it's been almost 22 minutes.
Tell my audience, what do you guys do? Because I feel like you are across all aspects of the real estate business.
Yeah, what we do, it actually depends on, what period of the timeline you're asking that question. So we're constantly evolving, not changing. We've never actually shed a business line, which I'm proud of, but we keep adding business lines, right? So at our core, we're helpers. We're advisors, right? So if you're a commercial real estate investor and you want to buy, sell, finance, manage, lease, develop, entitle, whatever it is you want to do in real estate, and you want a trusted source to guide you through that whole process, whether you're sophisticated or unsophisticated, like that's us, right? And so what we basically set up is, I call us a private wealth management company exclusively for commercial real estate investors.
I like that. I haven't heard it described that way before.
Trademarked. Don't anyone take that.
Yeah. And so differentiate yourself from the big shops.
So, look, it's really, no offense to the big shops. We do tons of business with big shops, and we actually employ the big shops. Like, we are clients of the big shops. So like our asset management portfolio, so we're managing $3.5 billion worth of real estate. Okay. We don't hire our own guys when there's leasing to be done. We hire JLL and CB and Newmark and whoever the best people in that market are, right? So, I know how these guys operate, and they're not a monolith, right? Like, you can't paint, CB as one kind of shop and JLL as another. It's all about the people who you're working with, right? Whereas what Pegasus has done is tried to create full consistency across the entire platform. So it doesn't matter like which person you're working with at Pegasus, that there's consistency, that it's bringing, as opposed to like this independent contractor status, right? Where it's like, hey, the brokerage is just the platform, is just the house. You kind of are your own business. That's not how we operate, because that doesn't create the consistency and sort of like the high bar that we're looking for.
So when I met you, I think it was 2008, 9, I was working at Raines Law.
I remember this. Yeah, I remember the deal we did.
Yeah.
The Goodyear tire portfolio.
That and...
the Dicks? The Dicks.
Oh, wow.
The Dicks in Eugene, Oregon.
Yeah.
Yeah.
I remember that.
Yeah.
And then even your deli on Pico.
Oh, that's right. Did you do that one? That was the very first deal I ever did.
Yeah. Yeah.
Hell yeah, bro. I love that.
That's bringing it back.
Yeah.
15 plus years more. Your business has evolved since then. Mm-hmm. So how or why did you think about being holistically involved, almost like a private wealth steward for real estate?
I didn't. It just sort of organically happened. I wish I was smart enough to just have this idea and then execute it. By the way, if I had the idea up front, it would have taken me a lot less time to get to where I am right now, right, in terms of where we are at the company. But no, it's been an amazing process. Started as a brokerage firm. The idea there was, again, provide extraordinarily high quality service and for the lower middle market, right? So I've told this story a bunch of times, but I knew people at East Hill, and I always admired them as a shop because they didn't feel like brokers. They felt more like, real estate investment bankers, which is really what they are. Right. And a lot of that is because they're on salaries, bonuses, they have extraordinary recruiting, vetting, training. And then there's a pathway to equity at the company. So everyone's sort of rowing in the same direction and everyone's interests are aligned, and there's not like businesses within businesses being operated. At East Hill, for sure, if you're working with one guy versus another guy, like, you feel like you're at East Hill. Right. You don't feel like you're at that.
A different team.
Yeah, exactly. Exactly. There's no infighting. There's nothing. Yeah. Right. So I wanted to create that for the lower middle market. Mm-hmm. And so, the brokerage did really well. We were kind of right place at the right time. There were a lot of people that owned properties, and, I got in the business in 2005. So 2005, 6, 7, selling apartment buildings. I wasn't selling them. I was mainly doing the exchanges, but, they would sell apartment buildings, or they had an owner user, schmata business in Vernon, and they sold the industrial building when they sold their business, and they did an opco-propco allocation, did an exchange, and then came to me to handle their exchange because we were buying stuff all over the country. I was flying around all over, meeting developers, seeing sites. So the markets like Phoenix and Salt Lake City and, Charlotte, Raleigh, Durham, Chapel Hill, Nashville, Chattanooga, Huntsville, these were all like path of growth markets back then. We were doing I did a deal. We bought a Taco Bell for a client in 2005 in Cleveland, Tennessee.
I didn't even know there was a Cleveland.
It's in Chattanooga. Okay. So anyways, we got lucky because a lot of our clients that we had put into these net lease properties, right? And you remember because you did a bunch of them, mm-hmm. They were corporate credit, right? We were buying them at high cap rates because that's just what cap rates were at the time. But long-term leases, corporate credit. Then the GFC hits. What happens? Everyone that's betting on real estate, needing things to happen, got screwed, right? And lost a lot of money. But the core assets did pretty well, right? So if you owned a CVS or a Starbucks or a Goodyear Tire Center or whatever, they paid rent. They paid rent through the GFC. These were investment grade credit tenants. They paid rent. So we looked really good. We looked really smart, right? And so, our clients are the best purveyors of our business, as I'm sure yours too. Like, we don't do really any marketing.
Mm-hmm.
It's all of our clients sending in their friends and family and stuff like that. So we had been sending all of our business to a group called Verona Capital Markets.
Sure.
You remember them,
Yeah.
Chad,
Yeah.
Bilo,
Yeah.
and Eliab Dan,
Sure.
and Ed Kim.
Mm-hmm.
Because they were masters in mortgage brokerage.
Mm-hmm.
These guys were awesome. Like Eliab was, came out of USC, worked at Morgan Stanley in their CMBS originations desk. Smart guy, business school. Chad, Harvard law graduate, like Percher attorney. Like, these were smart guys. Like, by all accounts, they should not have been doing mortgage brokerage, right? But they were doing it because it was the financial crisis and everything else had locked up. And so they started a boutique capital markets group. So I was sending all my business to them because they made me look good,
Mm-hmm.
right? It's like, these are smart guys. Like, so they were executing the business. Then we had an opportunity to bring them in-house. And so that was sort of the first taste of this vertical integration. Now we had the capital markets. When rates started dropping and cap rates started dropping, and we were still trying to buy property for our client with cash yield, because a lot of our clients are, they're somewhat fixed income type of investors. They want cash yield. They're not looking for 0, 0, 0, 0, then a 50,
Yep.
right? They want 10, 10, 10, 10, 10,
Yep.
right? So when cap rates dropped, we couldn't buy the single tenant stuff anymore. So we went to the next best thing. We started buying multi-tenant out parcels, right?
Mm-hmm.
So Starbucks, Chipotle, Aspen Dental, like all these strip centers, type stuff. We started buying that stuff in 2013, 2014. Hired a one guy to do some asset management. One of our family office clients that you've worked for needed someone that could roll up their sleeves and help them out with their portfolio. It wasn't a full-time job. I said, hey, why don't you pay the salary? We'll put him up at our company. He'll service your portfolio for half the day, and the other half he'll do odds and ends stuff for our clients. And that grew into what it is today, which is like managing 350 properties.
That's amazing. That's fantastic. So as we sit here today, fourth quarter of 24, I've said this on the podcast over the last couple months. It just feels different. The last 90, forget about the election. The last 3 to 4 months, sentiment is different. Transactional volume has increased. There's just more capital flowing across all my deals. It used to be, I would say, from July of 22.
I can see your deal board. It takes up the whole wall. This is impressive.
So from mid 22 to, let's say, mid to maybe spring of 24, 90% of my days, we were playing defense for our clients. Loan modifications, workouts, extensions, short sales, figuring out loan issues. In the last 3 to 4 months, we still have those, but that's now 10 to 15% of my day. The 85 to 90% of my day, clients going on offense, buying new deals.
Are these like core deals? Are they value add deals? Are they like?
I would say mostly value add deals.
Okay.
We don't do a lot of core. Maybe one-off core deals, but our clients are looking for value add or opportunistic. How has your business? How has business been over the last quarter or two?
Okay, so as we talked about, 21, 22, best years ever.
Can't even compare to those.
Right. 23 down 50% from 22. 24 down 50% from 23. We're going to end up strong. We have a big quarter lined up, but I think we're going to end up probably down 35% versus 2023.
So this triple net market.
So it's not just triple net. I mean, less than half our business are triple net deals now. Yeah. So, but that market's locked. Like that market is, I don't know, am I allowed to say that?
You can,
okay.
Please.
The triple net market is fucked.
And
it's fucked.
Why?
Because they're bonds. I mean, that's what happens. Like, bond yields go up. What do you think happens to, fixed income assets, right? I mean, now, is it a bad asset class? No. Like, are they going away?
So
no.
Where is that money going?
It's sitting. It's just sitting. By the way, it's not just because the market was bad for net lease. The market was bad for everything. And net lease is the recipient of 1031 exchange money, right?
Sure.
So it's like the final step right? No, the coffin's the final step. But right before you hit the coffin, you go to single tenant net lease, right? So but you have to sell something. There's not a ton of fresh capital that's buying single tenant net lease properties.
Yeah.
There's not a ton. There is some, and there always has been some. And especially like with the bonus depreciation, that was wild, right? But again, that was 21, right?
So where are you?
So the bonus depreciation, that was bringing new fresh capital to the market because people wanted that 100%, cost segregation, bonus depreciation. Yeah. So net lease, single tenant net lease got really hurt because number one, no one was trading. No one could sell their apartment building in LA, right? So then they didn't have the cash to trade into net lease.
Understood.
But then the ones that did are being way more picky, right? Because there's way more inventory out there and way less demand from the 1031 exchange market. And so that market's gotten really, really hurt. So you asked where I felt, like, how do I feel about the market? When Jay Powell did the 50 basis point reduction, dude, I was jumping out of my socks. Like, it was awesome. Like, the market was hitting, like the phone, like my wife was laughing because I went home and I'm like, hey, by the way, my phone takes incoming calls. Like, I had my phone ring. I was like, it took my phone ringing to be like, wait a second. Like, it
does work both ways.
It does ring, because I never even thought about the fact that it wasn't ringing. It just, when it finally did ring, I'm like, oh shit, it hasn't been ringing for like 2 years, right? So, phone started ringing. I actually got to go. We took a CVS, a single tenant CVS in Miami at 79th and Biscayne. Awesome intersection, one of only 4 causeways into the South Beach. 15 years, like something like this would have traded. It did trade, but it would have traded for like a 4.5 cap probably. We were going to price it at a 5, and then I started seeing like the exuberance, right? So I said, hey, let's actually drop the cap rate level. Let's push the pricing because I feel really good, right? Like this Fed announcement's awesome. The phone's ringing. Head fake, total head fake. I mean, the 10-year got down to 350, and now it's like 4.4.
I think it's now trading in the 4.3, 4.35 range. But
yeah, like it's a total head fake. We're back to shit. It's crazy. It's like, it's weird. I almost wonder like whether people are going to actually notice or not, right? It's like, oh, they kind of just felt like that we were heading in the right direction, and they're just going to ignore that we're not. But you can't if you're taking leverage.
So what do you predict for your business over the next year or two? Now, you've got a steady income stream with asset management fees. But in terms of transactional volume,
that saved our business for sure. Mm-hmm. And our goal at Pegasus is we have a number circled where it's like, hey, this is the AUM we need in order for the asset management business to cover the overhead of the entire firm. Mm-hmm. Meaning investment sales, leasing, capital markets can do 0 and we can still pay our bills, right? So we have that number circled. We're halfway there, maybe a little more than half. But that's, for us, that's the prize, right? Because then you're fortified. I mean, I told you the numbers, 50% down and then 35% down. So, that's, what is that, 65, 70% off of our highs, which were not sustainable highs, but still, like, we're young. I still feel young. You're very entrepreneurial for an attorney, right? So when things are good and things are hot and things are hitting, like, you want to add, you want to grow, you want to maybe take more space, you want to invest in software and technology, and, maybe you're adding people and overhead that you might not have otherwise, but not because you're an idiot, but because you're entrepreneurial, because you know when you have fuel, you got to throw it on the fire because that's how you're going to get it to burn hot. So we ran into that, issue where it's just like, it was awesome. And then it just sort of stopped.
Yeah.
But we're definitely better than we were. I mean, things are improving for sure. It's interesting. So on the multi-tenant strip center side, there's this asset class is like now becoming somewhat institutionalized.
Absolutely.
Like, it's crazy.
We've done more strip center or grocery anchored center deals in the last 12 months than I probably have in the last 12 years.
It's crazy.
Yeah.
It's nuts.
I think there's a contributing factor for a couple of reasons. One, I mean, no one's going into office from an institutional standpoint. Mm-hmm. The multifamily market has been sluggish for the last couple of years. And coming out of COVID, these retail centers are in demand. People just want to just experience and go out and shop and not just buy things on Amazon. And they want to feel and touch and be with people.
I think the theme of this podcast for today should be tallest midget in the circus, right? Because, okay, so
you're talking to a guy who's not that tall, so I'm not going to take personal offense.
I'm talking about, okay, retail. Like, why is retail great? We're the tallest midget in the circus, right? Industrial, there's a lot of supply that's come online. Rents have started dropping. Vacancies have spiked. Still a great asset class. Same thing in multifamily, right? No one touches office. And hospitality's been, right?
Sure.
So retail, tallest midget in the circus. Why did Donald Trump win? Tallest midget in the circus, right? Like, how is America not in default of its $30 trillion of debt? Tallest midget on the world circus, right? Like, yeah, we're clowns, but there's so many.
But we're the best.
We're the best clowns, right?
Compared to every other country.
Yeah, look at Europe, right? Like, they're a disaster, right? But that's what this should be: tallest midget in the circus. You don't actually have to be great. You just have to be better than everyone else, and it's all relative.
That's why we're all graded on a curve.
It's all relative.
So, let me ask a follow-up question on this tallest midget in the circus tagline.
Yeah.
I get your transaction. I may not get your your quarterly or monthly report. I probably did, but
what, the newsletter?
Yeah,
we just started.
Oh, okay, fine.
We just started, and we send it on the first Saturday of every month.
Oh, okay.
So you're probably in shul.
Yes, I'm
okay.
Shabbat. So,
KI, right?
There you go.
Yeah.
What I do get are your transactional blasts.
Oh,
your
the
deal blasts.
The text blasts.
Okay.
Yeah.
And they always have an unbelievable subject line.
Yeah.
Who comes up with those?
We do.
And when you say we, who?
I come up with a lot of them.
I mean, they are very.
We have a great marketing team. I'm going to give shout outs to Carmela De Vera and Kendra Fitzgerald.
But CBRE, Newmark would never be able to do what you do with your email blast.
They can't.
Give my audience an example.
Also, Andrew Leon. I want to give Andrew Leon a shout out because he's great at writing them too. Shout out to Andrew Leon.
He has a great name.
Yeah, it's true. He's also short. So what was your question? Oh, what are they? Like what?
Just give my audience because
so these are okay. I get what you okay. So
these are. I can't recall the last CBRE or JLL or Newmark email blast. I get a lot of them, but yours, I will take the time and look at.
That's the point.
They're hilarious.
That's the point. How many fucking deal emails do you get? And those are the only. By the way, I have my inbox and then I have my my non-focused. Right? You have your focused inbox. Do you have that?
No, but you're maybe more organized.
No. It's like an Outlook thing. It's it automatically arbitrarily. This isn't junk. It's there's a separate junk.
Yeah.
You should check your non-focus because you might have like important emails in there. Anyways, I'll show you afterwards. So that's supposed to catch, like, if the Gmail, the promotional, right? Promotional isn't necessarily junk email, but it's promotional email, right?
Yeah.
It's like, I don't need another pair of glasses from Warby Parker, but it's not junk email, right?
Understood.
Okay, so there's so much of it.
Let me ask you one final question.
Is it already that time?
Yeah.
Oh, wow.
I mean, we've been going on for 45 minutes or so.
This is fun. We can talk about you. I want to talk about you.
You can ask me anything.
Yeah, okay, so what I would like
Should we switch seats?
I mean,
we're good.
No, because I'm pretty sweaty. I don't want people to see that. How are you managing? I mean, you have a big business. How are you this work from home nonsense?
Well,
right?
We're not home, but yeah.
We're not home. We've been very, deleterious about, hey, you can work from home, just not for Pegasus, right? That's our motto. Lawyers are way different, way, way, way different. Like, we're dealing with lawyers all day long, and I see them getting on Zooms with the blurred backgrounds. I'm like, I see the Diddy baby oil in the background. Don't fool me, okay? So how do, because like you're
I thought I put that in the cabinet.
So you never know.
Yeah.
How are you dealing with that?
Yeah.
Right? Like are things changing? Are people coming back? Like what do you? Because you have to run both sides. You have to you're the house, right? So you have to make things. you have such a tough order because you have to pay these huge rents and have all these assistants and the refrigerators and the conference rooms and everything on the off chance they decide they want to come in, right?
So look, this could be a 45-minute answer in and of itself. Maybe we'll do a podcast.
2.0.
Yeah. So look, we will not hire anyone new unless they're coming into the office at least 3, preferably 4, ideally 5 days a week.
Okay. Good.
In terms of existing lawyers, what happened during COVID is, I would say, all of our employees were in LA, but many moved to other parts of the country
and stayed at the firm.
Wow. They were great.
Did they ask you?
Of course.
Okay, so they asked you. They say, "Hey, I want to move. Are you okay with it?"
Yeah, I can't even see my neighbors.
You didn't just see them online one day. It's like, wait, why is the Golden Gate Bridge in the background?
Yeah, okay. No. So I do. We do.
Not like anyone moved to San Francisco in COVID. Let's be serious.
Yeah, they moved to Boise. Right. They moved to Nashville. They moved to Florida. Mm-hmm. Right. So, and they're good. They're good employees. They're gonna continue working for us remotely.
Have you seen any change in their quality of work? Or?
No, because we hire most of our staff and lawyers are senior laden. It's a senior laden team. We're going to pick off talent from the big firms.
Right. So you're not hiring and training.
If you're a first year junior associate and we hired you, you're going to have to be in the office. Mm-hmm. Now, there are people who live anywhere from, I have a lawyer who lives a couple blocks from here and doesn't come into the office. She's phenomenal. Mm-hmm. I am not going to disrupt that apple cart. She performs. Clients love her. She gives great legal service. Yeah.
And you save on her parking. It's a win-win.
Yeah. And so it worked. Is it ideal? Would I rather have everyone in the office so I could bounce in and out of their office and not have to leave a voicemail and then they return? And of course. But
has there been better efficiency? Like, can they bill more hours? Like, can you see that? Because they don't have to commute, right?
It's a double-edged sword. Some people, yes, some people no. Okay. I cannot work from home. I cannot be efficient from home because what happens at 3:00? Yeah. My kids come home. Yeah. Oh, daddy's home. Let's go play with daddy. Mm-hmm. Well, no, I'm on a conference call. So being at home with our kids are relatively young, right? They still want to hang out with us. It is not
for long.
Yeah, true. A couple more years. It's not ideal.
Right.
So I'm a believer of working in the office. Have I been like militant and said, if you're not in the office, you can't work for Kirsh?
Are people coming? Because obviously, like you saw the announcement, right? Like Amazon and everything. Like now it's 5 days back, right?
Yeah.
Are you seeing that trend in like the legal space? In law or not really?
Law firms are the last to change. Mm-hmm. They just are. Mm-hmm. So whether it's technology, whether it's mandating that people work in the office, I think there was this law firm employers were scared to lose talent. Mm-hmm.
Yeah.
The leverage has changed. Mm-hmm. Even though we're busier, the leverage has changed. Law firms, employers have the leverage again. And so I feel that over the next couple of years, law firms are going to start mandating that their people work more from the office. It only helps, right? It only helps the client. It helps the firm. Sure. It helps culture. Yeah. It's not like you wake up one day and say, wow, what happened to our culture? It's just, it dissipates by 5-10% every year.
It's just like a chisel.
And now all of a sudden it's not the same place. So we are making a conscious effort to make people want to come to the office. You have to create an environment where people want to come.
Yeah. See, that's all I got. I mean, that's my question. You answered it perfectly.
Well, thank you. I'm going to ask you one last question, and then we're going to wrap.
Okay.
You said we were young, but we're not really.
We're pretty young.
Yeah, but we've been in the business for you.
So what? I'm 42. I'm turning 43.
49, my friend.
49. Okay. Yeah, but you're in better shape than I am. You're a better athlete. You have more hair. So here's why I think we're still young. When did we really start living?
Well, probably when I was born.
18. When did you actually
No, I hear you. You're saying we've only had 20, 25 years of actual
life. Yeah.
Yeah.
Right. And so if, let's say you start living your life when you're 18, for some people earlier, some people later, and let's say your average life expectancy is 90, if you take care of yourself and you're in good shape.
Don't get hit by a car.
Don't get hit by a car. Right. So like, what is that? That's like 72 years.
Mm-hmm.
Right. So, we're 25 years into our 72 years. Right. So like, we're like a third. That's not old.
No, we're
in our first trimester, baby.
We're climbing
You
up
know what I'm
that
saying?
mountain. So I'm going to ask you the question that
Do you agree or not?
I do.
Are you bought? Did that sell you? Or?
I never.
Do you feel like you're in your first trimester or second trimester?
So
Which trimester are you in?
Yeah. I never.
You look like you're in your first trimester. I mean, you look great.
Thank you.
Yeah.
I never cared about age. I thought age was a number. I'm not excited about turning 50.
Yeah.
I didn't care about turning 40. Who cares about turning 30?
Yeah.
I don't like turning 50.
Yeah.
Well, I'll let you know how it feels in 7 months.
Okay, perfect.
8 months. Here's my question. Maybe should be for someone that's much older in their third trimester. Okay. But you still have been doing this for 20 years.
Yeah.
A 22-year-old grad comes to you, says, David, I want to get into the business. If you were talking to your 22-year-old self, anything you would have done differently, any advice you would impart on that 22-year-old David Chasin?
Damn. I don't want to fuck this question up like Kamala did.
Oh, yeah.
Is there anything that I would have done? No, honestly, nothing. No.
Your life is perfect.
No, I mean, now I kind of feel bad for her for answering the question that way because that's how I want to answer it. I mean, look, I'm sure there's things that I could have done. I'm really happy with the way things are going.
You are Kamala Harris right now.
I am Kamala. Yeah, I'm Kamala. God, what would I have done differently? You know what? I can say this. So this isn't like if you're becoming a real estate agent or a broker. This is more so if you're becoming an entrepreneur and growing a business. Isolate your strengths and weaknesses quickly and then partner with people to handle what you're weak at, right? Focus on your strengths. Don't try to do it all, right? So for me, I can call them mistakes. I guess you can call them mistakes. All they did was sort of retard the growth, but they're learning experiences. So I can't really say they were mistakes, but I guess like a smarter version of me maybe would have partnered up with someone who was just an insane ninja on the operational and managerial side. I'm great at the craft. Like I can sell, I can interface with people, I can develop business. I'm really good on the deal side, but I'm a terrible manager of people and companies. And so finally we have that and it's great. And that's why we're hitting on all cylinders, but it's so common. And I'm sure it's the same thing in your business, right?
It's the same exact
right?
thing.
Having to grow and manage a law firm and run a company while also managing your clients and managing your book of business. Like that is really hard.
It's two totally different skill sets.
And you end up probably doing both less. You probably end up doing both shitty.
Well, speak for yourself. Don't speak for me.
Fine.
It is so.
I did them both shitty, but again, tallest midget in circus. I was I did it against other brokers. Well, that's a whole other episode.
Let me give you a compliment.
Okay.
As we end.
Okay.
It is so gratifying.
Not just one, by the way. You can do more.
More?
Yeah,
okay.
You said a compliment.
So it is so gratifying just to see the growth of you and Pegasus and. Although 6-7 years older than you, just knowing you for close to 20 years, you are one of the most respected, not just brokers, but real estate professionals in our community. And so I just want
that is a sad state of affairs.
Tallest midget in the circus.
Come here, I love
All
you.
right,
Thank you for that.
Thank you for coming on the show, and thank you for your candor. We live the west side of LA, and it's hard to speak about politics, especially if you're right of center. But I think today there's probably more people that are right of center than ever before. But I appreciate your candor and having just a civil conversation about politics, which I think more people need to have.
Yeah, 100%. Bring it.
So,
I'll meet you in any back alley to have a conversation about politics.
I appreciate it. Thanks for coming on, man.
All right, dude. Good to see you.
You've been listening to Real Talk, Real Estate Discussions with Andrew Kirsh. You can catch prior episodes at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Thank you for your positive reviews, comments, and for sharing the show with others.